I think we should start now. So, good afternoon, everybody. Let's start another episode of Bazaar Pe Charcha. Now, from the last 1 week, we all are facing sell-off across the globe, not only in India. And India is also falling in line with across the market globally. So now, how technically it is placed means Indian market is placed, especially Nifty and other major sectors. So we are going to discuss in next few minutes. So let's start with Nifty. So before discussion, let me give you a disclaimer. First thing is that whatever we are going to discuss in this particular webinar, please consider it as only for illustration purpose or example purpose. Please do not consider in either form of buy or sell recommendation. Before taking any action, please do your due diligence and act as per your own opinion. Okay. So this is our current market status. Yes. Okay. So as per O'Neill methodology of market direction, see this is the overall placement of market. So now in this week only, almost all sectors, including Nifty and everything, all key major sectors, except energy and auto, is now entered into either under pressure or in correction phase. Like pharma has already entered into correction, FMCG has already entered into correction, and apart from that, energy and auto is in rally, means confirmed uptrend as per O'Neill methodology, and other sectors including realty, banking, all are IT major. Means if I talk about in summarized manner, so two things, this banking, which is a major sector, and then another major sector is IT. Both are in now and in under pressure. Okay, so now let's discuss about technically how it is currently placed, technical point of view. Okay, so 1 minute, let me open chart. So as per O'Neill methodology, this is the Nifty chart, and this is the weekly chart actually. So before doing any further discussion, let me give you what happened in last week. So last week sale was started, or I can say that our market get triggered from US market, especially because of bond yield, as well as tapering, as well as inflation from European country as well as. So all these are the biggest reason, and I think today's fall is majorly because of this tension in between Russia and Ukraine. So all are now got trigger from this global sentiment, but at the same time, all these are, it was clearly showing from the last few months, especially from the October onwards on the chart, that market is not going to give further gain, at least in this particular year or first half of this particular year, 2022, on the basis of technicals as well as. And that is why from the October onwards, we are taking very much cautious approach, even though in between that after touching 16,400, market started, market has given a very good level of bounce back, but it once again, it failed to cross that 18,400 that we have mentioned in our report as well. That is 18,400 is a key level to watch, and it failed. Now, technically, it has reached 50 DMA, 100 DMA, but it is still holding about 200 DMA. Now, what we are expecting now, why this is level, if I talk about this level of 17,000, or I can say 100 minus plus point of 17,000. So I can say 16,900 to 17,000 or 17,100. Why this particular level is a critical level? So in my opinion, at least from technical perspective, there is a trend line present on daily chart, and that trend line is drawn after connecting this particular. Let me draw. Okay, so this trend line is if I draw trend line from here, let me draw for you annotation. Text. Draw. Okay, so if I draw a trend line here and here, this particular trend line. So this particular trend line is placed here. Okay. And that is why, in my opinion, at least, market has bounced back from this level also. And meanwhile, it is taking support around this level also. So that is why, once again, in my opinion, from here onward, before 200 DMA, because 200 DMA is now downside. So I can say that if I talk about current placement of 200 DMA, so current placement of 200 DMA is around 16,600, and meanwhile market is around 17,000. So I can say before 200 DMA, this from on the chart pattern and everything, this 16,900 I can say is a key level to watch. So maybe, and 200 DMA is placed around 16,600. So I can say market will try to hold in between this range, and that range is 16,600 roughly in downside and 17,000, 17,100 in upside. So market will start trading volatile in this particular range. Another thing is that this now after this much of fall, especially in last almost 6-7 trading session, there are lot of price distortion, at least in terms of short-term point of view. So that is why from the last 2 days, like Tuesday and today, market is giving some bounce back, because on short-term point of view, there is some price distortion on daily chart and as well as in intraday, and all these reactions because of that only. Another more thing is that today it hold previous day low, that is Tuesday's low. So that is also confirmed that 16,000 is 16,900 around level of level is a key level to watch. Now what next? What will happen in next? So from my opinion, unless and until this particular levels are holding, and that level is 200 DMA, and before that this 17,000 plus minus 100 is, there is no problem at all. But if I talk about larger picture, if I talk about larger picture, like on the basis of weekly chart and other things, so I can say at least in my opinion, once again, that sooner or later market will give up all these levels. Maybe I also don't know, and nobody don't know that when it will fall. Maybe tomorrow, then next day to tomorrow, not in this month, no, maybe in next month, market will give up all these levels. And maybe what I am expecting today, in next week, budget is due. So maybe market will get another round of trigger from budget session. So let's see what will happen. But technically, after considering all these factors and everything, Fibonacci retracement analysis and other momentum analysis, various technical indicator analysis, what is my expectation is that sooner or later market will give up all these levels and maybe fall further from here. Now in downside that 16,000 and 15,500, this particular range, because market was consolidated around almost 7 to 8 weeks in this particular range, and that range is 16,500 in 15,500 in downside and 16,000 in upside. So maybe market will try to retest that levels in coming few weeks, but obviously all these will take times. Maybe before that market will start bouncing back and maybe retest level of 17,400, 17,500, or maybe 17,700. But at least in my opinion, I am very much clear that market will turn bullish only above 17,700 or 17,800 level. Unless and until market is trading in sideways, market is trading below that level. That level is 17,700. I can expect at least that market will remain traded with negative bias. So bounce back from current level, bounce back cannot be denied at all. Bounce back may happen in coming days or coming weeks, but as overall sentiment has now clearly changed from almost this bullish trend or clear-cut bullish trend to correction kind of things. Another thing is that if I talk about RSI analysis and everything, so weekly RSI range shift analysis on weekly chart also suggests that there is some problem is there from little bit midterm perspective. Midterm perspective is like next 1 quarter or 2 quarter perspective. So after considering all these things, our bias would remain quite cautious in overall market, but at the same time, stock specific actions cannot be denied. Like you see, yesterday market was very negative, today market was very negative, but stock like Axis Bank and other few stocks in market was really doing good. So stock specific actions will remain. Otherwise, this is the current placement, at least in my opinion. If all these scenarios will change, then obviously we will change our opinion. But it seems like this that I have discussed here. Okay. Now let's discuss another major sector, that is Bank Nifty. So if you are aware, from the almost last 10 months, we are consistently saying that this Bank Nifty is from the February 2021 onward. Let me remove this first this trend line. Okay, so from February 2021 onwards, this particular index, that is Bank Nifty, was consistently underperforming to Nifty. In between that, there was few instances where it has outperformed to Nifty 50. Like I think it was, if I'm not wrong, it has outperformed for almost 3 weeks in the month of October or September or October, and same like it is outperforming compared to Nifty in the last few days, actually from the last few trading session, I can say. Because if you see the percentage of fall and other placement and everything, so in current scenario, at current juncture, Bank Nifty is comparatively outperforming. Now don't be confused in outperformance and underperformance. Outperformance means if Nifty fell 10% and Bank Nifty fell 6%, that means Bank Nifty has outperformed by 4%. Okay, so in that terms, I am talking all these things on relative terms, not on absolute terms. Okay, so it is outperforming, and most probably what I am expecting at current level, that it will remain in outperformance. Like there are some key earnings and everything, and there is a correction already happened in major stocks like HDFC Bank. Another thing is ICICI Bank is comparatively looking quite attractive. Axis Bank is looking quite attractive. So these all are the reasons. Even technical charts also, it has formed bottom just below this 200 DMA, and after that there was a sharp bounce back happened. Bounce back happened in the last 1.5 months. So after considering all these things, even today also it gained around more than 1% around. So after considering all these things, I am expecting this current outperformance may remain in continuation, but at the same time, outperformance does not that it will not give negative return comparatively. It may give, but comparatively to Nifty, now Bank Nifty is looking more attractive. So just keep watching. But my request to all of you, that focus on large cap banks only, and then few selective banks only. Otherwise, someone may be stuck in relatively other kind of banks, or relatively mid-size bank, or small size banks. So just start focus on that. But meanwhile, it is looking like that. If I talk about level point of view, so 200 DMA, and if I talk about 200 DMA, that level is placed around 36,000. So 200 DMA is placed around 36,000. So unless and until it is holding from level points of view, unless and until it is holding about 36,000, there is no problem at all. And at the same time, in upside, at the same upside is also intact. Upside is also capped, in my opinion, at least. Obviously, market will remain in correction and choppy and volatile move. So upside, it will not give that much. Most probably, it will not give that much return. But I can say that meanwhile, in upside 40,000 and in downside 36,000, maybe next few weeks actually, or few months, or February month, or like that, market will remain traded in that range only, and that range of 10%, 12%, and that range is 36,000 in downside and 40,000 in upside. But further, next week, central government is going to publish budget. We will get trigger from our market. Overall market will get trigger from budget. Maybe if there is some good things happen in budget, so obviously market will react. But in my opinion, once again, after considering various factors and everything, and government tenure and other psychological things, at least I am not expecting that much attractive things will happen in budget. But only time will answer this question, what will happen. Maybe we all will aware together on this Tuesday. So this is the current placement of Nifty and Bank Nifty. I think Mayuresh would like to discuss something about overall market. So please, Mayuresh.
Hey, thanks, Pawan. Guys, you can hear me? Can you hear me loud and clear?
Yes, please.
Super. No, so as Pawan mentioned, right, and as we have all witnessed, the last few days have been very, very volatile. The sell-off, very frankly, nobody was expecting in terms of the velocity. in which the markets came down, and all the other associated factors, the Fed hike, which is expected in March, expectations of further tightening as a possibility by other central bankers, and geopolitical issues, which is heightening the supply side issues and creating the supply constraints within the overall global ecosystem itself. So all these elements are creating stickiness when it comes to the global economy. And if you had seen a couple of days back, IMF actually has downgraded global GDP estimate for all these concerns put together. They've slashed the US estimates, they've slashed the Chinese estimates, they've cut down on the Indian estimates as well. But where the differentiation factor lies is, as Pawan also mentioned, what happens in the budget. Now, is there something in the budget that can have a delivery which can re-rate the markets at this point of time? In my opinion, I think there is not sufficient ammunition in the budget itself to have a re-rating done for the market. But what the market would ideally like to see is that there are no negative surprises. तो बहुत कुछ अच्छा अगर नहीं आया अभी, but अगर कुछ negatively surprise किया markets को, the markets will not like that. So if you go on maintaining your fiscal path, and we are just releasing that report, so I think for all MSI users, the budget report should be out either today evening, late in the evening, or tomorrow morning, where we are exclusively and extensively carrying out the entire analysis in terms of the balance sheet, which is displayed by the fiscal number, and every sector's expectation as well. I think it's an in-depth report that we are carrying through. Pretty interesting. So have a look at that. So I will not dwell too much into the budget report at this point of time. But what is it getting reflected into? I think the rate cycle, I think the spooking part is, and I've tweeted that. So if you go on my Twitter handle, you'll probably see that that we had actually studied on our global report the previous rate cycles in the US, and why banking as a pack, as Pawan also mentioned, is looking better and relatively better placed. I think for the system as a whole, rate hikes were pretty large in the US ecosystem. Whether that continues is the jitteriness that global markets are facing. In the Indian context, our last rate hike came in August 2018, which was a 25 bips hike, where in that period from April to August, we increased our rates from 6 to 6.5%. And ever since, I think there has been no upcycle as far as the rates are concerned on the higher side. However, I think 2014 and 2021, the banks were in a very, very weak position. Balance sheets were weak. A lot of recognition had to be done. Capital had to be pumped in. And 2021, where a lot of recognition has happened, cleansing up has happened. We are post or past the COVID scenario as well, and coming out even stronger. So this space looks very, very interesting. And with government capex, if you look at the government data, they've only spent 56%. So it is impossible that 44% will be spent in the last 3 months, even if you want to come to that fiscal targets of 6.5, which the finance minister had put forth. But there are a lot of adjustments per se. I think divestments have not happened to the tune of 1,50,000 crores. There might be some additional incentives for the weaker sections or the weaker strata of society, provisioning for COVID vaccinations onto the government balance sheet as well. I think if you adjust all that and whatever expenses are then back-ended in the next 2 months are primed into the economy, we might still persist with that figure of 6.5, but we are still relatively better off with a lot of the emerging economy ecosystems in the world. How will the glide path look forward? Our estimate is around 6.1, 6.2, which is relatively good when you compare other emerging economies. On a comparative scale, when it comes to inflation, India, along with Thailand and Indonesia, are better placed in terms of inflation numbers compared to the other emerging economies. The developed economies, the inflation has gone out of whack. So I think Eurozone at 5%, US at 7%, with consumer spending has increased at 5.7. So I think the basic issue lies is supply ho nahi raha hai, supply chain constraints hai, which will still persist. Your commentary सुन रहे हो सिर्फ chips के, it is not just restricted to chips. You look at the sea routes across the globe, they are having exponential rates at this point of time. And again, I think some of the containers across some key sea routes are coming back empty, and therefore nobody is wanting to send that ship back. And therefore, the issues that are getting created with a lot of factories being shut, partially opened, geopolitical issues, China being partially under lockdown, all these elements will still persist for the next 1 or 2 quarters, and demand has come roaring back. So I think the demand push inflation is actually carrying inflation across the globe at levels not seen before, and therefore the tightening mechanism that is needed. Can India follow the same thing? Our scenario in terms of food and fuel is different. So if you break inflation in core and non-core, the food and fuel part of inflation is very much under control. So if you look at crude prices as a whole, yes, I think for all these short-term issues, crude has jumped around $90 a barrel, maybe jumped to around 95 if more hola is created around these geopolitical scenarios. But generally, I think the consensus is it should settle around 75, 85. So the second round effects of crude will probably not happen in the Indian economy. Food output, Kharif was amazing. The kind of acreage or sowing that has happened for Rabi and the output which will come through in Feb, March, that should be good as well, which means that food inflation should be under control. If fuel is between 75, 85, second round effects of crude derivatives, which a lot of companies use, that should come or stabilize. And balance sheets on India incorporation, as I time and again mentioned, are at an all-time low. So if you compare it in the period of 2004 to 8, the previous bull run, the leverage on India in was almost 1.5, 1.8x. It is now 0.5 or 0.6x, which means you are very, very healthy. And that sign will now get replicated as lending improves across the system, inflation not getting uh, overheated, in control. And therefore, RBI being on top of things, even if the globe goes under immense amount of rate hikes, and there are issues in terms of imported inflation that hits our economy, we do not foresee any substantial rate hikes even in the next 6 to 8 months or 9 months that RBI will probably take in the Indian context, and therefore the accessibility of funds, which is an essential requirement for corporates across India, across sectors, I think that should continue. Allocations on private capex are essential as well, and therefore what the budget decides in terms of corporate capex or capex in terms of the capital account on infrastructure, housing, I think a lot of ancillary sectors are going to get affected in a very, very positive manner. Why? Because order flows will keep on coming through. As order flows start happening, utilization levels across sectors anywhere between 60 to 70%. As orders come in and as they start having their fixed asset turnover, which means that as they use their machinery to process these orders, the utilization level goes up, which creates huge amount of operating leverage onto balance sheets. And therefore that creates a huge multiplier effect when it comes to overall manufacturing, overall consumption, and as India as a whole, where discretionary incomes or the per capita income, as we call it in technical terms, has exceeded $2,000. You study any economy where $2,000 as per capita income was crossed, the next few years you saw exponential growth because the spending starts coming through, not just on essentials but things above the value chain, and therefore the entire process of manufacturing, consumption, and distribution, which propels the GDP, starts moving higher and higher. So I think we are in fine trend. Maybe on global conditions we might react considering where the market positioning might be, but I think over a longer period of time, I think we are in a far better position. And therefore, I think as opportunities come through across our market direction in canceling the M factor that we consider, and as appropriately decided where we are in a confirmed uptrend in that market cycle, I think we should make the best use of it. To take to Pawan's point, I think two scenarios on technical terms as I see it. One, I think if your risk reward is not too high, I think Nifty spreads can be taken into account. So I think bull put spreads. If somebody follows F&O, and for paucity of time, maybe I'll not be able to explain that in further detail. But bull put spreads are probably a very good action because that probably protects not too much upside, not too much of downside as well. And if we are able to manage the risk and volatility, I think bull put spreads for conservative traders should do well. For more risky traders, I think the bank Nifty bull spreads, as Pawan was also mentioning, I think on the bank Nifty itself, those also become very, very attractive options because what happens is that the action that you've seen probably in today's monthly expiry and the carry forward positions that are probably happening not just for tomorrow, but say for the next 2 weeks, 3 weeks, or the Feb expiry with budget in continuance. I think, and what a lot of factors which I said which support the bank Nifty as well. Results, a lot of results were very, very positive. Axis, ICICI, HDFC has good numbers. Federal Bank had good numbers. The smaller run banks like CSB had good numbers. Canara had good numbers. And some expectations again from public sector banks in the budget domain itself. So I think for more aggressive traders, I think the bank Nifty bull spreads for February expiry, I think those can be optionalities as well. So with this, I think I'll let Pawan continue. I think these were just a few takes in terms of fundamentals and technical I wanted to carry. So Pawan, you can take it from.
Yeah, thank you, Mahesh. Now let's discuss another sector. Then I will join and you will discuss. So let's talk about Nifty FMCG. So if I conclude whole placement of this Nifty FMCG, so it is trending below almost trending already trending below 200 DMA. It is consistently forming after double top formation here particular. It is consistently started forming this lower top lower bottom price formation on daily chart as well as a weekly chart. So overall structure is quite negative. If I talk about support and everything from little bit positional point of view, so maybe this particular thing, this particular index will take support around 35,000. Even today also it took support in downside. But maybe now I think what I'm expecting in FMCG that maybe now major fall once again major fall that does not mean it will not fall from here. It may fall from here also. But I am expecting that now almost 80% of fall is now printed on this chart or on past days. So maybe it will start consolidation around this 35,000 kind of range. So, but at the same time, I can say that it is not a good time to bet on this particular stock or sector stocks of this particular sector. It may remain traded volatile and choppy. Few stocks will do good, few stocks will do bad in coming days. So overall placement is negative, but at the same time, I can say that at least in my opinion, that major fall has been done in this particular space. But yes, it will take few more weeks actually to create some base and everything, and then only I will take a call. We will take a call that whether it will start trending upside or not. So meanwhile, as such, there is no sign of any clear-cut uptrend. Obviously, it is trending with negative bias and everything. So I can say that first this is the day it will start trending above 200 DMA. That first hope would be 200 DMA. Another hope is this immediate pivot level, and that is also placed around 38,100, and 200 DMA is placed around 37,300, 400. So I can say we will start thinking in this particular space once from bullish perspective. The day it will start trending about 38,000 to 38,200 kind of level. Unless and until it will remain traded volatile, choppy, maybe we also don't know whether it will form another bottom in downside. But yes, this particular range actually, and that range is level of 35,000 is a strong support. It will not give up so easily. Otherwise, overall bias is still negative. There is no doubt at all. Okay. And in between, obviously, there will be some action reaction kind of rally that someday it will fall, it may fall, someday it may not fall, or someday it may gain. So that is going to happen. But overall structure is negative, no doubt at all. So we need some more time to wait and watch how this sector is improving. Then only we will take a call on this particular thing. Otherwise, bias is still negative. So Rai, would you like to take few sectors?
Yeah. Thank you so much.
I'm stopping my screen. Please start.
Yeah, thank you. So I would like to discuss Nifty IT. So this is the daily chart. Just 1 second. So this is the daily chart of Nifty IT. And obviously one day that has is 27th trading is not here, that is of it's a today trading session, it is not showing here, but because the sectoral is 1 day delay, I think. So if you look at the daily chart, so it is continuously falling, and almost from past 8 days there has been massive downfall in IT. And if you look at this that we have shown in the beginning, that this, if you look at the entire sectoral chart, IT is the one which got minus 8.69% down in the last 1 week. So that was the massive hit in the entire Indian sectoral index, that the index has fallen 8.6% in the last 8 trading sessions. So as of now, the chart is not looking that much attractive. And if you look at and in our monthly report that we have released on 6th of January, where we have mentioned that the index might hit might it can hit around 40,000 to 40,500 level, but it has made the low of around 39,146, which was around minus 600 points here and there, you can say. But it was not able to hit that the range that we already republished. We have already mentioned in our report. But after that, we have also mentioned in that report that there was earnings session was there, and in that earnings session, it can have the impact on the IT sector, and it might weight negative gain or positive gain on the index. And it has actually happened like the same after the earnings that has been released by Wipro and HCL Technology. Those two stocks have actually impacted this particular index, and from there on, the result that has came of Mindtree and all, it has actually impacted the sentiment into negative one. So as of now, the overall the index is not looking, and it has already breached it all moving averages except 200 moving averages. It is just trading out just 200 moving average by 3% around, and it might act as a support level, or it might touch that 200 DMA as well. So we'll see, and we'll wait and watch how the things are going to be like in the next few days or in the next few weeks. So this is all about Nifty IT as of now. And then I would like to talk about Nifty Energy.
I think I want to add one point actually.
Please do that.
If you are aware about IT sectors, in the last time, I think we have did this Bazaar Pe Charcha exactly on the day Wipro, INPI and TCS was going to publish its reports.
Yeah, right.
And at that time also we have clearly mentioned that just wait and watch, because
yes.
why I was given this particular statement, because chart was suggesting something else, and that earning was suggesting something else. And that was, I was not that much convinced that even in spite of there is a good earning, good numbers, market will, or this particular stocks will do good, because somewhere these charts were indicating that there is some fishy things are happening. And in my opinion, at least now, after all these things, whatever happened in last 2 weeks, especially from last Bazaar Pe Charcha to this Bazaar Pe Charcha, I can say that now in conclusion form, that now much awaited correction has already started in this particular sector. It has already corrected, if I am not wrong, it has already corrected around 17-18% from top level. And now it is just about trending about 200 DMA, and 200 DMA is currently placed around, if I am not wrong, 1032,500. Okay. So meanwhile, it is placed around just 1,000 point above the 200 DMA. So 200 DMA is a first factor. So but in between, some bounce back cannot be denied in this particular sector like Nifty IT. But yes, now overall sentiment has just turned negative, and even though if it will not fall, then at least it will not gain also at the same time. Okay, so it will, in my opinion, at least you can expect that till March quarter end earning, I can expect. So February and March, or first half of this February and March, let's consider 2 months only. So from 2 month perspective, it will remain traded in sideways, volatile and choppy, and it will not give quite attractive move. But yes, at the same time, someone will be looking for this short term and everything. So there would be a lot of opportunities in between. But from the 2 month, I am not expecting that much good will happen, or that much good thing may happen in this particular space, that is IT. Okay, right, please.
Yeah. So my next sector would be Nifty Energy. So this is the chart, or this is the daily chart of Nifty Energy, and this particular index is looking attractive compared to all the sectors that we have. And even in our report also, we have mentioned that if the index is trading and holding above 23,300 to 23,500 level, then there is no need of there is no need of negative sign, and actually the index has almost in line with our sentiment, and it is actually holding above its 20 DMA as well. So as of now, there is no sign of we can say that bearishness, and entire shape of this Nifty energy is looking good, as Maurice has already explained regarding the oil price, and which is almost $90. So that has also impacted this particular index. And so in this space, I think if you look at the weekly chart here, so on the weekly chart also, there is no sign of that much of bearishness, or we can say that it is in the positive shape in all and all. So
Hello.
So if the index is trading and holding above its 21 DMA, I think there is no need of bringing the negative sentiment in the mind. But once the index is breaching its 21 DMA or 50 DMA, we can say, then we can expect some volatility and some volatile trading sessions. Okay, so next one will be Nifty Auto.
One thing I want to add in this. Actually,
Yeah, please add.
If you check, if you do analysis of component analysis of this energy index now. So energy index is comprised of everything. Actually, it covers oil, it covers power, it covers gas. So major component is Reliance Industry. So if I check last 2 week price action of these components of energy, so few stocks like Adani Green, Power Grid, so really did well, okay, in last 2 weeks. But at the same time, Reliance was not moved as in bullish trend. It has given some negative actions in the past few days. Then BPCL also remained traded volatile with negative bias in downside. So excluding these 2-3 stocks, one major is Reliance and then BPCL, almost all sectors either traded in positive territory trajectory or either traded in sideways trajectory. And that is why maybe most probably, in my opinion, once again, that it has outperformed in this falling market also. And now if I talk about, and another thing is that there are so many companies which are out of this basket, energy basket. There are so many companies like NTPC, Power Grid, ONGC are part of PSU sector, and PSU sectors generally do well pre-budget sessions and everything. And maybe because of that, these sectors, this is the reason I think has outperformed in last 2 weeks of or 10 days of fall. And maybe like Power Grid stocks, NTPC, if something good will happen from electric side and this power generation and everything sector, then maybe this particular stock will, or this particular sector as well as stocks among this particular sector will outperform in coming days. But for that we have to take call after budget only. Before that we can't take budget. Otherwise, technically, if I talk about components out of that, so the Power Grid is looking quite attractive at current juncture. But but once again, this is not a recommendation. Let me make you very clear. But it is looking attractive at the same time. Okay, please continue.
Yeah. So one last is there, that is Nifty Auto. Nifty Auto. Yeah. So this is the daily chart of Nifty Auto, and this index is also volatile after its recent high from 17th of January, as in the entire Indian market from the 17th January or 16th January, the volatility started, and in the last 1 week or last 8 trading session has been volatile. So this auto index has also got impacted, and taking the overall international news and entire this thing, this index has also impacted, but it has actually received the support of its 50 DMA, and from there it has actually bounced back from that level. So that is the positive thing that has happened in this particular index. So as far as this index is holding above its 50 DMA, then we can be positive. But once breaching this 50 DMA from this index, it might turn the sentiment negative. So this is the brief about Nifty Auto. And would you like to say anything about it?
Nifty Auto.
Nifty
So
Auto.
Nifty Auto is another stock, another sector actually. Let me open first. Nifty Auto. So Nifty Auto is another sector actually, which has shown resilience in current downfall in last few days falling market. And main reason was Maruti actually. And even last time I have discussed about, if I'm not wrong, I think I have not discussed actually. So Maruti has posted comparatively more than expectation, comparatively good numbers in compared to expectation, street expectation. And technically also it has given breakout. Maruti has given breakout also. Now it is placed around 8800. Today also it has tried to retest 9000 level. So Maruti is looking good. Tata Motor is comparatively looking not that much bad actually. So overall placement of the stocks, placement of this particular stocks, this particular sector is looking good. And this stock has outperformed, I can say once again. So maybe, maybe auto sector, I can say maybe the next turnaround is happening in auto sector. It is too early to comment. Let me make you very clear that it is too early to comment about that. Their turnaround may happen in auto sector, but after considering all these factors and everything, I can say that turnaround may happen in this particular space. Now the charts of this multi-time frame analysis of this sector is giving indication of these types of things. But at the same time, I want to give a level, and that level is in upside. That level is 12,000 to 12,100, 100-point range only. 12,000, 12,100 is a key level to watch in upside. I am expecting that once it will start trending above that level, so I can say fresh upside window is open, and that in that particular upside window, I can expect at least 3,000 kind of move. So maybe it will test new all-time high, that is 15,000. But for that, condition is that 12,000 or 12,100, whatever you want to consider, it must cross that level, and it must with good volume obviously, and start holding above that level. Above that level, I can say that window is open for, or door is open for 15,000 level. And in such scenario, I can expect that maybe by end of this year, this auto index will test level of 15,000 also. But for that, it must satisfy this particular condition. Otherwise, from the last 2 weeks, in last 2 weeks, it has given it has acted as a defensive particular thing, and did not fall that much like Nifty and other sectors. Okay, so would you like to discuss anything else, or should I discuss?
No, I have discussed my part. I think we should take.
Okay, let's do. Can you set this Nifty metal?
Yeah, sure.
Nifty metal chart. So if I talk about Nifty metal, so from the last almost 5 to 6 months actually, if I'm not wrong, so we are consistently saying that above 6,000 bullish trend will start, below 5,000 bearish trend will start, plus minus 100 or 200 point. I'm not denying for that. Sometimes we give 6,000, 6,100 in upside, and sometimes after considering a lot of factors, and sometimes we give 5,000 or 4,900 kind of level. Now, what next in this actually? So meanwhile, it is exactly from the last almost 2 months, it is holding 200 DMA. Even today, last time also, one and a half month back, it has retested 200 DMA and then bounced back. And in this week also, it has retested 200 DMA, and it is still has not given decisive breakdown below 200 DMA. But at the same time, after doing price analysis and everything and other analysis, momentum analysis and range shift analysis of RSI, I can say that there is a sooner or later it will give up this 200 DMA. Before that, I cannot deny if you bounce back. But meanwhile, it shows that it will give a breakdown below that 200 DMA. And in such case, I can expect in downside, if it, so condition is that if it will hold 200 DMA, then obviously bounce back cannot be denied. And at the same time, bounce back does not mean that fresh bull trend. Fresh bull trend is totally different thing. Bounce back is just retracement of previous fall or previous gain. That's it. So meanwhile, so holding about 200 DMA, it may give some bounce back in coming days. breaching below, because it is exactly on 200 DMA. Breaching below 200 DMA, I can say that at least a level of 5,000 in downside, and below 5,000, I can expect once it will start trending below 5,000 in downside, I can expect 4,500 to 4,400 kind of levels in coming few weeks and months or coming quarters in Nifty metal. Otherwise, bounce back cannot be denied. Otherwise, from the next 15-week perspective, because next 15 days we will do another Bazaar Pe Charcha. So from next 15-week perspective, I can say that there is not major thing is going to happen in this particular index. So if it will happen, then obviously we will try to update you as soon as possible. But overall placement is not looking that much attractive. One needs to take some extra caution in this particular stock, in this particular sector. Otherwise, some here and there upside bounce back and another thing cannot be denied for that. Okay. Now another thing is that Nifty Realty. All right, last one. Then we will take query.
Okay.
So in the last few webinars, I have given a level. That level was plus minus 10.500. Level was 500 plus minus 10 point. That above 500, it range is 500 to 550. Below 500, range is 440, 450 in downside and 500 in upside. Now, last month actually, it hold that level, but this time it has breached this level of 500 or 490 kind of level, and meanwhile it is placed around 460. So I can say that now 200 DMA, if I talk about 400 DMA, so 400 DMA is placed around 425. So I can say that now sooner or later this particular index, that is Realty index, will retest 200 DMA in coming few weeks. But immediately at the short-term perspective, I am not denying for few bounce back, but overall structure is quite negative now. Negative, because it is now from the last almost 3 months, it is consistently forming lower top, lower bottom price structure. On the last 10 days also, it is forming lower high, lower low. So it is trending below 100 DMA, 50 DMA. There is some negative crossover which already happened on this at 50 DMA and 21 DMA.
Pawan,
Yes,
I think your screen is frozen. It's showing a Nifty metal instead of Nifty Realty.
right.
Okay. This is not his screen. I thought.
1 minute. I think he is facing some network issue. Let me share my screen actually. 1 minute. Right. Can you stop sharing your screen so I can share my screen?
Now it started. Actually, that was internal issue. It got stuck. Yeah. Now the start is of
But we are still not able to see. Now it is appearing.
Okay. Then okay. Stop share. I stopped my screen.
Okay.
Sharing.
Okay, I'm sharing my screen. So. So 200 DMA is placed around this level, and that level is 430 kind of level. So I cannot deny that it will not retest 425 or 430 point, kind of level in downside. But overall structure from longer term perspective, I am still intact that it is in bullish trend. But yes, after considering overall market and everything, other sectors movement, the news or whatever is coming from global factor as well as domestic factor, I can say that it will remain traded and volatile. Another thing is that budget is also there. So let's see what government will do from this particular sector like housing and everything. So it will get triggered from that also, and that will decide further trend in coming week actually. So just wait and watch. Otherwise, overall placement is from short-term perspective to mid-term perspective, at least from next 1 month perspective, I can say is quite bias is quite negative. But yes, we should wait till budget, and then only we will take a clear-cut indication that whether something is good thing is happened in budget, and on that basis we will take call. Otherwise, bias is like mixed kind of thing, that overall sentiment is negative, especially for short-term perspective, short to mid-term perspective. So I think we have already discussed almost all key major sectors. Is there any particular sectors apart from this? Let me check.
No, I think we have
let's start taking query actually. In between that, if you find any particular key things, then we will discuss. Okay. So first question I am starting that please cover Nifty media also. Okay, no problem. There is a request related to Nifty media. Let's discuss Nifty media. Okay. We will wrap up in Nifty media. So Nifty in Nifty media on daily chart, yes, this is weekly chart and this is daily chart. So comparatively, once again, Nifty media is still trending in sideways zone only. And first time I can say that it has given breakdown below after breakdown below this neckline of head and shoulder pattern formation on daily chart. So it will remain traded and volatile in coming few weeks and days. But overall structure is not that much negative, I can say. And it is still trading above all key, not all key moving average, but 200 DMA as well as 200 DMAs. But now it has breached 50 DMA as well as this 50 DMA as well as 100 DMA, and but at the same time holding 50 DMA. So at the same time, I can say that after this level range, it has breakdown level was 2150. And in 2150, and meanwhile it is sorry, 20, not 2150, 2150 60, and now it has retest actually. So yesterday it has given breakdown below that level of 2150, 2160, and now today after forming new low on daily basis, it has retested in same day. So I can say that if it will remain traded below 2150 broadly, 2150, it will remain negative. But somehow but suppose somehow it will manage to hold about 2150, so maybe it will start trading with some positive kind of thing. So 2150, just keep watching. Below 2150, sustainable trading below 2150. I can say that in downside next target would be 200 DMA. Now 200 DMA is placed around this 1960. So below 2150, I can say that 200 points kind of correction may happen. But anyhow, somehow if it will hold about 2150, so there is not that much problem actually. So just keep watching. About 2150, some positive actions may happen. Below 2150, some negative actions may happen. So that's this. So keep watching this level 2150 because it is a critical level. Okay. Now let's take query actually. So Reliance, HPCL, now Reliance and HPCL. So I have already, when I think I was discussing about energy and everything, I have already discussed about Reliance.
We have shown Reliance the time.
Yes. So Reliance is now consistently forming high, lower top, lower bottom price structure, but it is still trending about 200 DMA. And see, if I talk about price and everything, so 200 DMA is a key level to watch. It obviously Reliance is a heavyweight and everything, and it's not only 200 DMA on the basis of price structure, price pattern and everything. This level of 2200, I can say 2200 to 2250, or I can say that 2200 to 2300, 100-point range is a critical level. It will not give up that much easily, that 2200, 2300 level. So maybe it will start bouncing back maybe in coming few days, but overall structure is not looking that much attractive. Fresh entry would not advise. If someone wants to talk bottom fishing, then bottom fishing one can do only on the base after keeping proper stop loss as well as some bounce back action for short term point of view only. For mid term perspective as well as from longer term perspective, I would suggest just wait and watch, because overall structure of market, overall structure of other sector, IT and everything is not looking that much lucrative or attractive. So meanwhile, 200 DMA in downside, or from points levels point of view, 2200 to 2300 is a critical level. Some bounce back or some count sideways kind of things may happen in coming days and coming weeks. Otherwise, overall structure is not looking that much attractive. Now let's take quickly HPCL and HPCL in Petro, no? In Petro. So Hind Petro is also not looking that much attractive, but at the same time, it is not looking that much bad as well. So I can say that sideways kind of things in coming days. From the upside perspective, just keep watching this one trend. Actually, if you draw a trend line connecting this high of November and this high of January, so just draw a trend line, and somehow it will manage to hold above that trend line. You break out above that level. So after doing analysis and everything, I can say that some positivity will turn, because overall, if I do this trend analysis and everything from the last 1 year price chart, so from the last one year price chart, it is consistently forming higher top higher bottom price structure. Even from O'Neill methodology of base market base and stock base and everything, it is now trending in stage 2B consolidation. But for early entry and everything, unless and until it is not giving breakout about this, let me draw actually trend line, then that would give you more clear picture. So just trend line this. So unless and until it is trading below this particular trend line, I would not suggest anybody to take entry in this particular stock. Suppose it will give breakout of this trend line, so the one can keep stop loss here, and that level is around 300 if I'm not wrong. Let me check. That level is around, sorry, that level is here as 300. So below 300 one can keep stop loss and start take position, but at the same time you should not avoid, you can't avoid this risk reward ratio as well, as because in choppy market risk reward ratio is that does not look that much attractive to take entry actually. So lot of factors associated with while taking entry. Meanwhile, it is looking sideways only. Okay. Now one more stock from this space, then we will move toward another sector or space, BPCL. So BPCL is not looking that much attractive. So I would suggest in one line, if I conclude these things, if just keep watching Hind Petro in compared to BPCL. Avoid BPCL for time being, and you can, if someone is interested in this particular space, so one can start tracking this Hind Petro compared to this BPCL. Okay. Now let's take IT support level. Someone is asking, you can consider 200 DMA. It is just above 1000 points above this 200 DMA. So 200 DMA is a key factors at current juncture, but overall structure is now turned from positive to negative. And I can say that, at least in my opinion, once again, this is my personal opinion. So please consider that after doing a lot of analysis, I can share with you that now much awaited correction has already started in IT, and it is not going to create base and everything that much easily, at least for 2 months actually. That is February and month. When I was discussing about IT, I have clearly mentioned that at least for next 2 months, to February and March, it will not give that much attractive performance. But yes, overall, so you can start tracking that way. Otherwise, downside, we have already mentioned 200 DMA is a key level to watch.
So may I take some?
Yes, please.
Okay.
Should I stop sharing?
Yeah, please.
1 minute. Yes, please.
Okay, I want to continue. Yes. So Mahendra is asking about NIIT Limited. So this is the stock. So this is the stock in NIIT Limited, and this stock is not looking attractive at all, or we can say that it is in correction phase from past 4 days, and before that actually it was in the sideways zone, and it was like maybe it can break out from there, but it has happened the reverse of it, and the stock is actually falling from past 4 days, and it has breached It's for short term and one long term, that is 150 DMA, two long term moving averages as well. So still, I think as of now, we will not advise to buy at this particular point of time. So I think it is not looking that much attractive. Yeah. So next one is asked by Prabhat. He is asking about Mindtree. Okay. So I have already discussed about IT sector, and IT sector has been falling from past 8 days, and that sector has actually lost the most compared to the all the index. It has lost around 8.7% in last 8 trading sessions. So this Mindtree is also a part of IT sector, and this stock has been falling from 13th of January, and then it is consistently falling. But now I think 200 DMA is just 1.8% away. It might breach that level or it gets support from that level. It can be decided only after one or two trading sessions. Okay, so if that support, if it is having support of 200 DMA and from there it is trying to show a bounce back move, then obviously there that might act as
I have already discussed this BPCL and HPCL and Reliance.
No, I am talking about not that one.
But your screen is showing, your screen, which stock is showing? Okay, sorry. Yes, continue. Mindtree. Yes.
Mindtree I am talking, yeah.
Yes,
So
sorry.
this 200 DMA might act as a support level, and then that might act as an entry point as well. So as of now, I think if someone wants to buy or someone wants to to be in the watch list of those particular investors, this particular index, then they can wait and watch for one or two trading sessions, and we'll see whether it is having support here or whether that support is breached.
Actually, I want to share an interesting story about Mindtree. One of our client has written a mail to me, and he was asking about this stock actually.
Okay.
After just immediate after these numbers. So I have given a reply that I am not looking that much attractive, and most probably it will fall. 3500 is a key level to watch. Now it is 3500 is almost, it is nearby 3500. But I want to address everyone, including that particular person to whom I have replied that that now still it is not a good time to buy. Okay, so just avoid for buying purpose. I cannot deny that it will not bounce back from here. It may bounce back even tomorrow. It may bounce back from, because 200 DMA is there and everything. But after considering a lot of analysis and everything on multi-time frame charts, momentum analysis and all, I can say that it is still not in good buying range. Maybe in future days, especially for investment purpose. For trading purpose, yes, if it will give bounce back, then obviously one can utilize that particular movement for 3, 4, 5%, 6%, or 8%. But if someone is really interested to buy and hold this particular stock, so still it is not a good time to buy. But yes, I am not denying for some short-term kind of move. It may happen. It may happen tomorrow onwards as well. Okay.
Yeah. So another stock is Persistent. Persistent was asked by Mr. Parvat. So here also the same story, and the stock has been falling since January 3rd only. But and if you look at the chart, it is not looking that much attractive. Actually, it is in the it is looking very negative, we can say, and it has already breached its 50 DMA, sorry, 100 DMA as well. So as of now, if someone wants to take the entry in this particular stock, I don't think that is a great idea. Okay, so we need to wait and watch, and we have been talking about IT sector and some of the IT index, even Pawan is talking about IT sector. So as of now, from our side, I think this is not the right time to buy. And once again, if 100 DMA, if it is try to reclaim its 100 DMA in one or two trading sessions, and from there it is having support, then obviously one can take the entry point from that angle. The next stock is Astral. So one guy has taken Astral and he has bought at 2450. So I think he has bought Astral at 2450, maybe somewhere around. Yeah, maybe he must have bought on 11th of January maybe. And yeah, that was like a breakout from some sideways move, but that breakout was not sustained for a long time. After that breakout, once we have bought at 2450, the stock has actually traded in sideways for some days, and after that there has been a fall, and it has fallen, there has been regular fall from past 8 to 9 days, and now the stock is actually, you can say, holding somehow of 200 DMA, but that is also not sure whether it will sustain its holding or whether it will breach. Once this 200 DMA is breached, then it might turn more volatile and some more negativity will be there.
I want to share some psychological thing regarding this particular query. That is,
yeah.
So someone has already bought at 2450. Now stock is 2080. So it has almost corrected, if I am not, around 17-18% from his buying point, his or her buying point. Okay. So first thing is that as per O'Neill methodology of investing and trading, you should not hold stock if it has fall more than 8% or 10%.
Yeah, to 10%.
So because see, sometimes I am not saying that after falling 10% it will not bounce back. It may bounce back. I am not denying for that. But at least you will not face this type of losses like 20%. It has already fell 17-18%. Now we also don't know how much it will fall. Now it is exactly on 200 DMA. Now, one thing is that, let me make you very clear here. In my opinion, after doing high time frame chart analysis, high time frame chart analysis means weekly and above weekly. So I can say that this time it is entering into some serious kind of correction. Okay. So I am not denying some bounce back from here. Bounce back may happen because it is exactly on 200 DMA. If something positive things happen in from tomorrow onward, so bounce back may happen. And then I would suggest someone whomsoever is holding this particular stock is just utilize that bounce back opportunity, bounce back price to exit opportunity. So that's it I want to say, because I am not looking it will turn suddenly, and then because there is some, this time actually there is some serious correction started in my opinion. So I would like to say that please utilize, if any kind of bounce back happen, please utilize that bounce back opportunity for exit in this particular stock, so you can minimize your losses. But just keep watching 8 to 10% of stop loss criteria for future reference. Okay, in all your future trades.
Okay, I have stopped my screen sharing. Please, you start your screen sharing.
You can actually write.
Okay. Okay.
Okay. No. I have done. Okay.
Okay. Okay then.
So which query is there? Is there any important query? Let me open.
AD is asking about ABB.
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 India, na? So correction, I can say that correction started after good number of weeks or good number of days of consolidation. And correction, I can say that correction started today only, and today it fell more than 10%, then recovered and closed with around 7.5% loss. But somehow it managed to hold above 50 DMA. But I am expecting this correction will extend further from here, maybe toward 100 DMA, or maybe toward more than 200 DMA to 1900 kinds of level. Meanwhile, it is 2200. So I would suggest someone, if someone has not bought, then avoid it for buying purpose. If someone is holding, so just keep watching stop loss below this 15 DMA. Sustainable trading below 50 DMA will create more negativity, and in coming few weeks and coming few months, I can say that at least if it will not gain, so at least from next 2 month perspective, that is February and March, if it will not fall, then at least it will remain traded in sideways only. So take your actions, because you are better aware about your entry price and exit price. But meanwhile, current placement is that maybe correction started from today only in this particular stock.
One is another stock is Deepak Nitrite.
Deepak Nitrite.
After that, Dixon is there.
So Deepak Nitrite, once again, it is a 200 DMA forming lower top, lower bottom price structure. Then there is some, if I talk about this particular space, so once again, this space that is chemical and specialty chemical space, long due correction is already is ongoing. So I'm not denying for further fall from here. Just 200 DMA is a key level. Once again, not denying for bounce back, but overall structure is negative. Take your call. If someone wants to take entry, I would not suggest anybody to take entry from investment perspective. But yes, on the basis of bounce back, one can trade from trading perspective. So one can generate from trading point of view, but from investment point of view, this is not a right time to invest in this particular stock at current juncture. And 200 DMA, that is current level around, is a key level to watch. Below this particular level, further fall may happen. Below above that, bounce back may happen. But bounce back, that does not mean once again that bull trend started. Okay.
Yeah, Dixon. Please take Dixon. It is also falling, almost similar like Deepak Nitrite. It has already breached.
Yes, it has already breached actually 200 DMA. And another thing is that it is looking more negative on weekly and monthly chart. If I talk about weekly chart, so this week fall actually, this week fall only has started falling after almost 3 months of consolidation. So after considering all these things, and now it is already decisively breached 200 DMA and everything. And this RSI and everything also suggests it will remain traded with negative bias in coming weeks. So trend is negative now for time being, at least for at least next 2 month perspective at least. Okay, another one.
Redington.
Redington. So Redington is a part of auto stock, of auto ancillary, if I'm not wrong. Let me check here. Machinery and everything, equipment, and it is looking good actually, to frankly speaking. Technically on monthly chart, from monthly chart perspective, it is a key level. That key level is 165. Meanwhile, it is today it has closed around 163, 164, 163 around. So just keep watching level of 165. Sustainable trading above, even it is nearby this from the last almost this 6 months actually. It, as per O'Neill methodology, it is trending in stage 3 consolidation, and it is about this pivot level is also placed around 180, and from an advanced technical point of view, level is that 165, 170. So just keep watching level of this 165, 170. I am expecting sustainable trading about this 165, 170 will start another fresh uptrend, but at the same time, failure to hold that level will remain volatile. So 165, 170 is a key level to watch. Sustainable trading above that level may start fresh upside window in this particular stock. Otherwise, as such, if at current juncture, stock is not looking quite attractive. But level is that, condition is that it must cross and hold that particular range. That range is 165 to 170. Okay. Another one, right?
Yeah.
Let's take 2-3 only, 2-3 query. Then we will wrap up this session around 5:50.
Yeah.
5:47.
Affle.
So, one second. AFFL, huh? Okay. So see, if I talk about from a structure point of view, so till now there was not that much damage. Even if I ignore this fall, if I consider this fall happened in last week. So from top level, from 1500 to 1200, it has already corrected 20% around. I'm not denying for that, but but from the level perspective, unless and until it is holding above 1000 level. 1000 level is a psychological level in this particular stock. 1000 level, meanwhile it is 1200. So unless and until it is holding about 1000 level, as such there is no problem. But at the same time, 1000 level is almost, if I'm not wrong, almost 17-18% away. So maybe 1000, it may slowly and gradually in coming few weeks and coming few months, it will retest this level of this particular level, and that level is around 1050. So I am expecting that it will retest that particular level, that 1000 level or 1050 level in coming few weeks. And correction from the midterm perspective, correction has started in this particular stock also. So just keep watching that particular level. Overall trend, if someone wants to enter in this particular stock, so I would not suggest once again at the same time from investment point of view, but from trading point of view, bounce back may happen. And if someone is skilled and everything, so one can utilize that particular thing. But from downside, it will enter into clear cut downtrend once it will breach 1000 level. Below 1000 level, I can say that it has entered into in major correction from longer term perspective. Unless and until it is holding about 1000, I can say that it is in correction from midterm perspective and everything. So it is like that. Let's take let's live from large cap only.
One guy is asking about SRF from long time. SRF.
Okay.
I think SRF has posted its earning yesterday. So he's asking that what action we should take.
So I have first let me make you. I have not checked this earning actually because overall market is falling. So I have not checked. But if I talk about technical and everything point of view, so not looking that much attractive. Just avoid for timing. I would not suggest anybody to enter in this particular stock. And if someone is already holding, so this level of this 50 DMA as well as 100 DMA, both are in parallel, just 2% away from each other. So and this is and it is placed around current level, and current level is around 2300, 2350. So I can say that if someone is holding, just keep stop loss below 2300 and hold. If some bounce back happens, so you can utilize that bounce back from exit perspective. Otherwise, I would not suggest anybody to take fresh entry at least from next few weeks perspective in this particular stocks also. Is there any major query? So I can discuss. Otherwise, we would wrap up this session.
One more you take Asian Paint and then we'll close.
Okay, so let's take last query. Asian.
Last query from Nifty 50 parts.
Okay. So see, major effect this crude actually, crude price. Now crude is around $90 Brent crude. And another thing is that now after last week, up to 4 weeks of appreciation in rupee, now rupee has also started appreciation. And I think today only it has crossed the level of 75. So one thing is rupee started appreciation. Another thing is that crude price and everything, now global tension is also started in this week. So after considering all these things, I'm not expecting much good from this particular stock, Asian Paint. But at the same time, technically, if I talk about, it is holding even today. Yesterday it has reached 200 DMA, but it managed to close about 200 DMA. And now today also it hold about 200 DMA. So technically 200 DMA is a key level to watch. The day it will decisively breach 200 DMA and then start trending below that, more serious correction will start in this particular stock. But so I can say in conclusion that it is not looking that much attractive. I would not suggest anybody to take entry at this level. If someone wants to buy bottom fish, because we never advise anybody to do bottom fishing and everything, unless and until you will not have proper strategy, proper exit strategy and everything. But after considering current market scenario and everything, major events is going to happen in coming week and everything, I would not suggest anybody to take fresh entry. At least I would suggest from overall perspective to everyone that at least wait till next week actually. Next week, that budget week. Maybe market will take next trigger from budget only. And budget will decide only that market is going in bounce back or uptrend or downtrend. If something good will happen, then of course there will be a bounce back and sustainable trading below sustainable trading over 17,800 will start positive thing. But at the same time, if there is some negative will happen in budget or something attractive will not happen in budget, then of course market will start trending according to that. Just wait till I think Tuesday. After that, we can take fresh actions. After that, only we can take fresh opinion on market. And if as far as this stock perspective, not looking attractive to take fresh entry at this level. So I think we have discussed all major things, all stocks, all major queries asked by our subscribers or from your side. So let's wrap up this session here. We will once again come back to you in next 15 days in another Bazaar Pe Charcha episode. So thanks for joining. Thanks to all of you. Stay safe. Keep enjoying market and budget session in next week. Okay, thank you.